for the introduction, and thanks to everybody that is attending today. We're super excited about this partnership with Rocket Dollar. As Katie mentioned earlier, this is our third installation of our educational series on investing in the private markets. And today's topic is cryptocurrencies, digital assets. So I'm just going to give a high level educational viewpoint of different ways that we at Regiment see people investing in the digital asset space. And then I'll give you a purview into some of the recent calls we've had with some of the investment opportunities. But as our fun slide here is, this is educational in nature. So I'm not going to talk to the deals and merits of investing in cryptocurrency or deals centered in the space. My lawyers make me say all this stuff. It's imperative that you do your own research in the cryptocurrency space in any private investment to understand the risks. The disclaimers and disclosures are important to help people understand the risks and make it a conversation versus something that's ignored. So without further ado, a layout of today's webinar, I'm going to give you a little bit of background about who I am. We'll cover the different ways to invest in the digital asset space, and then we'll do a breakdown of an investment. Then we'll hand it over to Brendan, and he's going to talk to the merits of using your self-directed 401k and self-directed IRA to make those investments. So a little bit about me. I've been in the capital market space since I graduated from college. I was a floor trader at the Chicago Board of Trade in the 30-year bonds and grain room. I transitioned off the floor and I ran an institutional trade desk for several years, and then helped start a retail futures, stock, and options brokerage. I managed that for 10 years. While I was a manager at that derivatives desk, I created a option overlay strategy where we had 3 different funds, and I managed over $100 million trading different concentrated stock positions, as well as a volatility arbitrage strategy. And if you look at those years on when I was managing those options, 2008 happened to be one of the most volatile years in the stock market. And if you ask a lot of people that manage mean reversion volatility funds, they probably didn't do so hot in '08, but we managed to not lose money that year. So we had a lot of happy customers. I transitioned off of the trade desk into more of a senior role and helped start a company called RCM, which is located in Chicago. It's a full-blown financial services firm, an RIA, a broker-dealer, an introducing broker in the future space. So I've had plenty of experience in capital markets and all different types of asset classes. And what rings true and why I share this, my background with you is, it's not about how much money you make in investing. It's about how well you get at not losing money, like how good you become at risk management. So across all the different tracks of my investment experience in different types of funds and different investments on behalf of ourselves and our clients, we've become honed in on the craft of assessing and managing risk. And if you can manage risk in a mean reversion volatility strategy through 2008, we kind of feel and put pride in ourselves that you can manage risk in just about any asset class. So that was the impetus behind me sharing my background. Is we pride ourselves on risk management, and we've had the opportunity through me, and almost every member on my team in some capacity has a risk management and trading background in the derivatives market in Chicago. Enough about me. Let's talk about what we came here for, and that's ways to invest in digital assets. So I'll dig in a little bit more, but the DIY is do it yourself. If you have a hunch, you want to buy some crypto, there's ways you can do it on your own. And we'll touch deeper into that. There's indirect ways. I call this the picks and sticks. So you're not going to be buying crypto, but you're going to be investing in projects and companies that have a high level understanding and a deep technical understanding of all the different infrastructure plays that are in the crypto space. So it's an indirect, you're not actually buying the crypto, but you're putting your money to work in a company that understands how to build the picks and sticks, so to speak, in the infrastructure. So we'll take a little deeper dive into that. And then another way to invest, which we've covered in the last 2 educational webinars with Rocket Dollar, is find a professional hedge fund asset manager that has, a trading strategy or an edge that creates alpha, where they're the ones that are taking your money and managing it on your behalf. So we'll cover that briefly as well. So the DIY model is popular more in the retail space, which is, I've got $100. I want to learn about crypto. I'm going to invest. What we see the most is people going to Coinbase or Kraken, establishing an account. It'd be similar to, opening a Charles Schwab account to trade stocks or a Robinhood account to trade stocks. Coinbase and Kraken would be the Robinhood or Charles Schwab equivalent in the self-directed space. I personally have a Coinbase account. There's different ways you can invest in crypto, but if you're just what they call a hodler in the space, they juxtapose the L and the D. Instead of calling a holder, they call it a hodler. If you plan on just hodling your Bitcoin, a Coinbase or Kraken account is sufficient. I wouldn't recommend using Coinbase or Kraken as a trading mechanism, like getting in and out of the marketplace. They're sufficient in what they provide, similar to like a Robinhood or a Charles Schwab in the stock space. Um, a lot of people choose to create a wallet off of the exchange. So you would purchase the crypto through Coinbase, and then you would use the hashtag mechanism to then send to your wallet. So you have more security in case one of the exchanges were hacked. A lot of people remember an exchange that was hacked back a few years back called Mt. Gox, where their crypto mysteriously disappeared and people didn't have protection. So a lot of people will take it off the exchange, so to speak, and create their own wallet. Bitcoin obviously is the largest market value and the one that we see the most activity in. There's been a huge uptick in interest in Ethereum. Um, Litecoin is also another popular coin. You see more activity in the altcoin space, so outside of the top two or three cryptocurrencies, where you're seeing altcoins pop up is in what they call DeFi or decentralized finance. There's a lot of different projects and mechanisms that you can invest in and look at through the altcoin universe. I think the natural appeal in the altcoins is the price is significantly lower. Like if you look at Bitcoin's price per coin, it's 11,500, per coin, where a lot of times in the altcoins you can get in for under $1 with the hopes that if one of these hits, your $100, if it goes from $1 and you own 100 coins with that $100 purchase and it 10x's, it starts getting a lot more interesting, a lot faster. But it still feels like the altcoin universe to me feels like the OTC, like penny stock market, where you hear a lot of different stories about pump and dumps and the altcoin universe. But there are some viable projects in the altcoin universe, and the DeFi area is what we see. And there's ways to do that by yourself through the different exchanges as well. And then the last way you can kind of invest as a DIY investor in the crypto space is participating as a Bitcoin miner um, or an altcoin miner. I won't go into the technical deep dive on what Bitcoin mining is, but essentially, if this is your first time learning of Bitcoin mining, the best way to think of it is a miner is essentially somebody that pays for electricity to keep the blockchain running that Bitcoin sits on. And by keeping the electricity running, they're basically verifying all the transactions on the blockchain for Bitcoin all the way back to the first transaction. And when you get to that first transaction, you're rewarded by receiving part of a Bitcoin. So that's how you produce do it yourself from the mining perspective. I will say mining has become it's becoming institutionalized. Like large companies are figuring out how to lower capex in the electricity cost space and the real estate space, and they're figuring out how to get faster and more rigs going. So the mining world is becoming a little crowded, or a little more crowded than it was 5 years ago, but there's still the capacity to learn um, and do it yourself from the mining perspective. And I know this is a lot of information, and everybody in the audience may feel like they're drinking from the fire hose, but like Brendan mentioned, we'll do some Q&A at the end, and I want to keep it going fluid here. So that's a high level as far as the do-it-yourself investing. The indirect investment philosophy is kind of what we've adopted at Regiment. We're not buying tons of Bitcoin and we're not trading altcoins. We've got projects that we've found that our accredited investors are investing in to give them access to the companies that are building the infrastructure for the crypto world. So our belief is that the pipes right now aren't big enough, that if all the people in the world started pouring into cryptocurrency because of whatever their reason, value storage online, they've got enough money in fiat or exposure to different fiats, or they've got enough real estate or hard assets like gold and silver that they want another way to store their value. Our thesis is basically if everybody runs to the crypto vault, so to speak, to start changing some of their current fiat currencies into crypto, there aren't enough companies that actually could help onboard people from US dollar to crypto. So we've been specifically looking at projects and companies within the crypto space that help with on ramping and onboarding people from US dollars to crypto, as well as the asset management of crypto. So different custodial types, banking, those are and payments are where we've been looking, as well as high performance compute mining projects, because we see the institutional scale happening there. So that's what we're out doing all the time with our fund, Regiment Alpha. We're looking for indirect investment opportunities within the crypto space because we see the play as being bigger than the actual value of the coins going up. We see the value of the companies that get it right to help people get access to the coins as a big play. So that's when I say indirectly investing. We're not physically investing in ICOs, STOs, or the coins themselves. We're helping people invest in the companies that are going to help the masses onboard to crypto when that time comes. And then the third way to invest in the cryptocurrency markets, and we find this to be a great method for any investors, is the private asset manager. So everybody in the asset management space in crypto um, is newer. Like the experience, like the most experience you could have is like 10 years because that's how long, or 11, I guess that's how long Bitcoin has been around. We saw a mass rush into the professional management of cryptocurrencies from a hedge fund perspective in the 2017 when crypto was spiking. We saw a lot of hedge fund managers shifting their focus from, maybe they were trading energies like crude oil, they had an edge or an arbitrage strategy in some type of different commodity or equities or bonds. We saw a lot of shifting from old strategies in 2017 and 2018 into cryptocurrencies. So there's been a lot of downside in that time period. You went from 20,000, 22,000 in Bitcoin down to 3 in that 13-month period. So there was a lot of bloodshed early in the professional um, asset manager side of the crypto space. But now we're starting to see some real growth from different professional managers um, and professional platforms. Probably the best example right now of a professional platform that I would recommend to look at for your cryptocurrency um, idea, especially in a yieldless world. Like right now, if you have some cash in a bank account and you leave it in cash in a fiat like US dollar, you're probably not earning really any interest in that. Even if you put it in a money market, it's not going to be making that much interest. There's companies right now that you can go to purchase your cryptocurrency with them or hashtag it over to them, and they will pay you an annual yield um, in tune of, I've seen 5 to 8% for them to hold um, your crypto. They rehypothecate it and then they get paid a higher yield and they just make that arbitrage. But that's a really popular thing right now. There's a company in New York that's gone from about 100 million in assets on their platform up to 1.5 billion in assets on their platform in the last 9 months. And that's a way that you can be in crypto and get paid a yield And then you have the choice of whether you want to take the upside and downside risk of the underlying price of crypto. There are some companies out there that will give you a yield and also protect your upside and downside risk in a collar strategy. I won't break down the semantics of each of those strategies, but um, we've seen a big uptick in the professional manager space in crypto specifically. The arbitrage strategies where you buy on one exchange and sell on a different exchange with a small differentiator. Um, that started out hot early, 2016, 2017. But much like the arbitrage strategies in the derivatives world from the CBOT to the CME in the early 2000s, the crypto arbitrage strategies aren't as lucrative as they were even 3 months ago. So we're not looking at that space as much. DeFi is hot right now. We've definitely looking at market making as a service and different altcoin projects that we can direct in the company, not the coin. But DeFi is definitely the hot professional manager tool right now in the crypto space. And then the third point here, the alpha generation, it's just more of a pointer. The number one question you should ask a professional money manager in any space, especially in the crypto space, is what's your edge? Like, what makes you different, and how is your edge going to generate alpha? Um, they need to be able to answer that question. And if they've got a viable answer for that question, that's when, what we covered in the last two webinars, that's when the due diligence process starts. If they have a good answer as far as how they can add value by having a true edge and not an artificial edge or a make believe edge. So, what fundamentals of a digital investment need to be covered? So, if you're DIY or not, you still want to, before you invest in crypto, you want to have a good idea of what percentage of your investable assets do you want in crypto, and how do you come to those answers? How do you source your investment projects? So if you're investing in like what I call the sticks and shovel or the picks and shovels, like how are you sourcing those projects? And what does a due diligence process on the asset manager look like? So this is a good question. Like once you've established the how to buy crypto, like how much is the next question, and how do I actually do it? So the advice that we give clients is, one, you never want to put more than you can risk in something, and more than you could afford to lose, I should say. So in any private investment, whether it's directly investing in the coin or a company or a professional manager, you have to have a comfort level of how much you could afford to lose. And we always look at it as in absolute terms. We don't use VAR, calculate value at risk calculations. I look at it as an absolute. So if I have $1 million in my portfolio and I say I'm comfortable with any one of the investments of losing up to 3%. Well, if I'm comfortable losing up to 3% on that $1 million in my investment portfolio, I would start out with 1% or $10,000 and invest in crypto and monitor it for 3 months, one quarter, to get an idea of how that looks and feels and to create a greater understanding. And I would crank up based on my comfortability. That's one way to do it. Another way, which is popular in the stock market, is the concept of dollar cost averaging and rebalancing, which I'm a firm believer in. The idea of dollar cost averaging is when the price is higher, you buy less. And when the price is lower, you buy more. And with time, you even yourself out that you're always a buyer. Um, that's an investment strategy. Um, we've advised people in the past few years that whatever number they're comfortable with in their, you know, monthly salary to, purchase $100, $1,000, whatever they're comfortable with every 2 weeks, every week, whatever their number is. And that strategy in Bitcoin has paid off well over the past 2 years. You've taken some pretty volatile rides, but those are from a do-it-yourself investment process. If you're just interested in having some exposure to Bitcoin and you're not looking at trading it, you're not looking at investing in different projects or you're not interested in investing with a professional hedge fund manager, that's the advice we've been giving people as far as how to get into uh, Bitcoin specifically. Investing in the projects, the hardest part for this is just connectivity to the marketplace. If you're an individual high net worth investor, how are you going to hear about the deals? Like, how do the good deals get to the marketplace? That's always the biggest edge that a venture capital firm would have. Like, there's a pretty good chance Andreessen Horowitz is going to see a good deal before Regiment sees it. Um, just because they're a big name in the venture capital space. Pantera is another big name in the venture capital space, specifically in the crypto and blockchain space. So, Regiment, starting our venture capital fund, Regiment Alpha, we've kind of carved out a name for ourselves in Chicago and the Chicago ecosystem by us standing up a $25 million fintech focused venture capital fund. And with over 40 people on our team in our ecosystem at Regiment, which we call the Ranger Nation. Um, Everybody on our team has strategic relationships and connectivity into the largest fintech funds globally, as well as the generalist funds. And we've got partnerships with over 10 different large financial institutions that can help with deal flow as well as help with connectivity. Like, once we find a deal that we're ready to invest in, we've got connectivity to large financial firms that can become customers of those startups that we invest in. Our thesis and edge we clearly define as our ability to not only write a check to a fintech company, but our ability to get our hands dirty and really get into the connectivity of the marketplace once we've made the investment. And we're seeing deal flow from three continents, a focus with the Chicago ecosystem right now. Um, but that's the important part when you're investing in the projects is how do you get your deal flow? So just want to point out we have a deal that we're doing a webinar with next Thursday. We'll send out a link to the webinar next Thursday for the mining project that we are representing right now through Regiment's Investment Bank. So we'll be doing that webinar. We'll send you a link. The great thing about this partnership, and I think I forgot to mention it on our last webinar, is if you're a Rocket Dollar client and you come to a Regiment sponsored webinar, if you like the presentation and the company that's being presented, you can invest directly through the Regiment platform using your Rocket Dollar account. We're integrated with our APIs. So if you come to our platform and you like a deal and you have a Rocket Dollar account, when you get to the funding part of the deal, all you have to do is press a button that says fund with my Rocket Dollar account. And like I said, we'll follow up with the link to that webinar. It's next Thursday on our mining project. And then right before I hand it over to Brendan, I'm happy to send anybody a checklist, like a professional due diligence checklist that we use to vet the managers that we select in every asset class, whether it's venture, real estate, or cryptocurrency. I can't stress enough that the due diligence process is probably the most crucial part of selecting an outside manager, like somebody outside of yourself. Obviously, this industry is built on trust. Going through the due diligence process is a way that you accelerate the trust building process. You're asking tough questions, you're doing background checks, and a lot of times you're not going to get the right answers, and those are red flags. And if anybody would like a copy of a professional due diligence checklist for your educational purposes, we're happy to share ours with you. Um, but even before you send out the due diligence questionnaire to a manager, we look at a couple things from a high level, like their track record. What were they doing before crypto? How did they do in 2018 if they were around in 2018, and what their answers are? And after you've vetted enough managers in the space, we don't ask the questions because we don't know the answers. We ask the questions to make sure the hedge fund managers know the right answers. And a lot of times you catch managers trying to skate through a due diligence interview. And when a red flag goes up, like, you don't invest in a manager that gives one wrong answer. And they've got over 100 chances to make a wrong answer. So the process is the most important piece of a private investment in whatever you're investing in, whether it's a startup, a real estate project, or a crypto fund. The due diligence process is absolutely the biggest part of it. And I'd be happy to share our questionnaire with anyone. Um, Real quick about our platform, like I mentioned, we've got a technology platform and a family of private funds. We'll find a deal, and if it meshes with the investment thesis of our fund, we'll write a check, and then we'll hand it off to a Series 7 registered representative at our investment bank with our technology platform to syndicate other investors that are comfortable investing alongside of us, that know that we've done the due diligence and we've got the investment thesis to match with the project that we're investing. And last mention is we've got a deal with Rocket Dollar. If you go and open an account with Rocket Dollar and mention Rangers or Regiment, you'll get a one-time, the initial discount. Brendan, correct me if I'm wrong, but I think the one-time initial discount is $50.
$50
Yep,
off the
50. So that's your present for attending today. If you don't have a Rocket Dollar account, you just made $50 if you're interested in open that by using the Rangers or Regiment moniker. And that's all I have. I'm going to stay around in case anybody has any questions for me afterwards. And Brendan, take it away.
Okay, just getting my slides open. Okay, so my name is Brendan Walsh. Again, I came from the financial advising industry in Chicago. And I came down here to Austin to join Rocket Dollar. Before Rocket Dollar was doing 401ks, financial advising, working with small business owners a lot and individuals just on stocks and bonds and our portfolios here. So, who is Rocket Dollar? Currently, if you ask for a Bitcoin IRA or a crypto IRA, there's really only one competitor that came out first called Bitcoin IRA. And that's because the self-directed industry, the industry in alternatives, has been pretty lacking in technology, in pricing, in service. So a lot of people ask, why haven't I heard of a lot of self-directed providers? Why aren't there too many Bitcoin IRA providers? A lot of it is just old technology, old trust companies. They've been charging a lot of money, and it's not really something you brag about. So what we came into the self-directed industry was saying, hey, we're going to offer an IRA and a solo 401k. We're going to make it a lot cheaper and easier to do. And we're slowly going to try and increase the technology here. There's a lot of different assets like crypto that are newer, kind of on the edge here. We want to make those easy to hold. So here's our just simplest products: a traditional IRA, a Roth IRA, which is very popular with our crypto investors, and a solo 401k, which can do traditional and Roth. If you do have any self-employment, if you know someone with a side gig that's looking to save in retirement savings, it's slightly more complex, but it is so worth it to learn what a solo 401k is. We just have like a no taxes moniker saying, hey, you shouldn't have to pay taxes on your crypto when you don't need to. So here's our general model, the IRA LLC. This, as I'd mentioned before, had been pretty expensive. You're trying to pay a lawyer at least $1,200, sometimes up to $5,000 to create one of these custom, so they can invest in crypto. So we really tried to productize this. Base level of $360, then $15 a month to operate it. You can get some money knocked off with the Rangers Regiment code there. So what is a IRA LLC? It's an IRA, just like you might have a TD Ameritrade or Schwab, but it also has an LLC and a bank account attached to it. And we appoint every Rocket Dollar customer as manager of their own LLC. So this allows a unique structure to say, I get to decide where my investments go. No custodian can tell me what I can or cannot hold in this IRA. As long as it's allowed by the IRS, you are good to own it. And that makes it very powerful to go out and purchase cryptocurrencies. And one of the most interesting parts of it is you get to be in control of your storage. Some of our competitors, like Bitcoin IRA, they control the storage, and that works fine for some people. There's a lot of people that say, not my keys, not my coins. And Bitcoin IRA did have a tussle, and this is something we talk about. If a custodian has a tussle over with their partnership, there's a lot of investors sitting there with their coins in the middle of that argument, saying, who's going to own my coins 3 or 4 months from now? So the IRA LLC allows you to directly purchase your own crypto assets, allows you to invest into blockchain startups. You can go into crypto funds, and you can also go into stuff that is non-crypto, like real estate, private lending, and many other different assets. So this is a really common question. When someone looks at this structure of the self-directed IRA, they're saying, okay, that's great, I can own crypto, but how do I actually get it there? And I'm just going to talk about, the 3 different topics that Mike went over. How do you actually get your money into these investments using a self-directed IRA at Rocket Dollar? So first of all, you got to start with fiat dollars, rolling them over to us. Currently, unless a new company or startup has sprung up as maybe a bit of a competitor of ours or in some new space, there is no way to get crypto directly into a retirement account. You got to start with fiat US dollars. You roll that from an old IRA, 401k, or you can contribute new dollars. Then you can purchase your crypto after that. Buying or selling your own crypto between your IRA could be an issue with the IRS, could be what's called self-dealing. But with that checking account that we have connected to the IRA LLC, connected right to that structure there at our partner bank, this allows you to send a wire to a crypto fund or exchange. You can write a check to a crypto startup. You can do ACH, if the exchange or the whatever provider has a bank connection. Our customers can get a debit card. Sometimes this works for smaller purchases of crypto. Sometimes people will purchase a hardware wallet to do their own storage. And then, getting your money back. You can keep this money out in a crypto investment for months or even years, but, a startup can write you an investor's check, and you can scan it, take a picture of it at our partner bank. Someone can wire that back to you, or you can do an ACH up to $100,000 once you get that approved in that service. Okay, so a lot of people come to us for direct investing into crypto coins and exchanges. And the great part about Rocket Dollar, we have a partnership with Gemini. We have some partnerships with CoinMe. They're an advisor that helps people with cryptocurrency and how to buy that. The great thing is you can use any crypto exchange that you like. A lot of people use the ones listed above. Some people, they like the reputation of Coinbase and Gemini, but the fees are too high. A lot of people go to Kraken, Binance. It's the possibilities are really endless. What's just important is that that exchange accepts your LLC, not your personal name. So we have some people ask about Robinhood. Hey, I want to use Robinhood. The commissions are nothing there. They have to be able to accept your IRA LLC that we've created for you and appointed you the manager of, because there can be no confusion at the exchange between your personal account and your retirement account's crypto. And that's mature exchanges can usually handle that. New exchanges, that might be something a little new to them. And also, your LLC is not taxable. You don't want to get taxed in this crypto. So you want to work with an exchange that understands that, so that you don't get wrapped up in a tax notice or someone saying that you owe taxes when you really don't. So just a few things to keep in mind as you're using your own exchange. You can use your own wallets, and you can use your own hardware. There is absolutely no commingling of your personal crypto with your retirement crypto. Some people ask extra questions about it. There's no ifs, ands, or buts about it. The IRS will not be happy with this no matter what you do with it. All devices and services that you use for the crypto must be paid for with the IRA. So some people will have a hardware wallet. They'll say, hey, I have this old hardware wallet sitting around. I could put my retirement crypto on it, right? It is the smartest to buy a whole separate new hardware wallet, because if there's any historical record of you buying that hardware wallet personally, or storing some of your personal crypto on there and mixing that, that could be seen as an issue with the IRS. So it's just safer, spend an extra $50 or whatever it is, 50 or $100 to have a storage system. Maybe you have a safety deposit box somewhere, so that you're nice and confident. And when in doubt, there's a lot of rules in self-directed IRAs for real estate and gold and precious metals. That's what these accounts are built on. That's what all our old competitors built these accounts. So there are countless cases. People ask, hey, is a self-directed IRA legal? Yes, the IRS has commented on a self-directed IRA countless times throughout our legal history. And we can look to gold and precious metals. So a common problem with gold and precious metals, they were letting all these investors buy gold. The IRS was totally fine with that, people putting gold inside their self-directed IRA, but they would audit people and they would go to a gold investor's safe at home and they'd say, hey, which of these gold bars are your personal gold? Which is your IRA's gold? And the person would sit there and scratch their head, these 6 are in my IRA, these 5 are personal, but they really didn't have too much to prove or the record of which one was which. The IRS just said, hey, no more gold stored at home. The IRS has never commented on storage of crypto in a self-directed IRA, but we can take inspiration as crypto tends to, run faster than the law does. Let's keep our accounts in a nice way that's going to be friendly with the IRS. So some people ask, hey, I have a token or some type of project I want to get to, but it's not on one of these major exchanges that can easily recognize my LLC. So you can buy Bitcoin or Ethereum in your self-directed IRA. You can then exchange that. Since that is inside an IRA, there are no trading or capital gains taxes for that transaction. So our accounts are really popular with 2 types of people. Now, the stakers, lenders, and DeFi as well, but a lot of the holders love our accounts, just kind of long storage and holding. Some very active traders really love our accounts because that totally decreases the taxes in there that they're getting hit with. And then each year, you basically have to report the value of all of your crypto accounts as of December 31st. Basically, hey, how much is in the IRA? As long as you're accurately keeping track of all that, we report that to the IRS for you. It's just a number. It's not what tokens are in. You don't have to go have a list of all 50, 60 tokens. You just have to say, hey, my IRA is worth $14,000. And then, only if you were ever audited would you ever actually get to go through more in depth. Some people ask this question. It comes up a lot. Can I stake or lend crypto? In a self-directed IRA, you are perfectly able to lend out fiat dollars out to anyone to get a return. Private lending is extremely popular among real estate investors, among business investors. Notes are very popular. So the IRS has never said, that you can't do this. So, there's a lot of people lending out their crypto. Crypto is thought of as property by the IRS and SEC. So, people can lend out property and things and fiat dollars out of an IRA. Why not crypto? So indirect investing, delivering a check to like a blockchain startup or some type of project. And, people ask, well, how do I actually get my check there? So, we did this at the startups webinar last time, just kind of explaining like, who are you talking to? How do you get your check to them? How does it actually arrive? So, you might talk with a startup CEO, maybe there's a venture fund, investment bank like Regiment that knows this startup. That's helping you get your investment and process it. Maybe you're talking to an associate of a fund, investor relations that really knows these certain companies or parts of a crypto fund. Of a company fund, startup fund to invest in these different projects. So you might have to negotiate, with the specific CEO, the startup leadership. You should do all paperwork for the deal structure with your LLC on the paperwork, not your personal name, because you are not the owner of the startup. Your IRA is owning and investing part of the startup. Usually a project like this, they're going to expect a wire or maybe even a physical check that you mail to deliver and be part of the investment, part of the deal closing. It's always best that, with that checkbook bank account, you keep that Rocket Dollar bank account ready for further capital calls or investment returns. And that's what makes it really easy to get in and out of a startup. No one has to sit there and go over paperwork with you for months or get this startup or project approved on a platform. With the checkbook IRA, you simply get to enter that project as soon as you feel that it's good enough to do so for your IRA. So then the last topic, and I'll finish up quickly and then we'll time for questions here. Investing in a crypto fund or an asset manager. So, who are you going to sit down with before that? You might have a Zoom call with the investor relations, maybe the fund strategists, the traders, and Mike was talking about, here's things to ask. Here's vetting questions that you should make sure if you're handing over a sizable investment to them, you should be able to trust that they're going to be able to handle that, deploy that well. So, usually, the amount of negotiation, they've probably done this before. So you're not negotiating too much on terms. They have, hey, if you're at this investment level, these are your terms to enter the fund or the asset management. So you want to talk about that track record before you're making that transaction. One common question with a crypto fund, do they buy it for you? Do they start buying the crypto at market price? Do you give them fiat dollars? Some funds, they might have some broker help, but they expect you to come with the crypto in hand, ready to go for them to trade. So that's a really big decision. If you're comfortable with coming in with your own crypto, that's something you can obviously do. But if they expect you to purchase the crypto, make sure you're getting a fair deal. Are they charging an extra processing fee? Are they giving you a proper price? If you went into Coinbase, maybe you're not used to that yet, and you just bought it yourself, is the price relatively close? Okay, you're paying them a little bit for that processing and brokerage. That's understandable. They make a little bit of money, but there shouldn't be a giant margin in between where you're buying and where another broker would be buying for you. And yeah, so we've had a lot of people ask about, they've been in a Bitcoin ETF in the public markets. It's one of the few options to get in crypto in a Fidelity account or Charles Schwab account. We have some crypto enthusiasts, and I'm not going to go too into detail about it, but they get really frustrated with the price difference between the Bitcoin ETF and the actual price of Ethereum and Bitcoin. And that gets extremely frustrating, and a new investor might not quite understand that spread. So, that's been a frustration of people in the crypto space, that sometimes if you're new, you might have to take a step back, read some stuff online, ask maybe someone more experienced than you. You could talk to someone like Regiment, maybe an advisor who is comfortable in the crypto space, and say, okay, do I understand that? And again, with the fund, your Ira LLC is the investor. You are the LLC manager that you'll sign all paperwork. You'll probably deliver money to a fund like this through a wire transaction. They just prefer it that way. But you always want to keep your bank account ready, maybe if you're transferring more money to this fund in the future. So just a few more quick things and I'll finish up for questions. This is our pricing here. We don't have the nice gift with 5 million fees of some of our competitors, but a $360 and $15 a month. We've tried to make that IRA LLC a lot more affordable. Some people might have a financial advisor, maybe come from a family office. Maybe they just say, hey, I want a bit more guidance and white glove support on my self-directed IRA. I'm going to be doing a lot of different deals here. So I have a gold account for $600 and then $30 a month. And that will come with a checkbook and debit card right out of the box, extra support, help on the taxes and stuff like that, just extra guidance. We're not tax advisors. We're not financial advisors, but we can provide that extra guidance to use a self-directed IRA. And with that code there again, $50 off for Regiment and Rangers. That should work. If you have any issues with those, just message me immediately. I'll make sure it works and you get that $50 discount. So just going to pause here for questions. People can pop into the chat and we'd be really happy to answer those. Thank you so much, everyone, for staying tuned in. No matter your experience level, very experienced, or if you're new to this space, love if you ask some questions. And if you're more advanced, as Cavanaugh said, they have a webinar next week for going over a deal and some other options in cryptos.
Great job, Brendan. You made some solid follow-on pointers there. I like the tips you gave out. Good stuff.
All right, I'm enabling Q&A now. It's now live. Sorry about that. If everyone was trying to really get a question in, you can now pop that in. Yeah, so I just enabled everything on Q&A and chat. There we go. Okay.
Looks like we're getting some.
Yep. What is the difference between an ETF and a mutual fund? So I'll talk about that in the crypto frame space. as Jonathan is asking. So there's a few public ETFs that kind of rose to the occasion to a Bitcoin trust, if you will. Grayscale is really popular. Is that they basically have a Bitcoin trust and they allow you to invest in it while they purchase Bitcoin for you. So similar to how an ETF or a mutual fund stocks, they say, hey, we're buying crypto, and then um, they start buying more crypto to go into that fund or trust. And that's that frustration that we had seen is, Mike's talking about you go to a private hedge fund or asset manager where they're directly buying the crypto at a certain price. When it comes to an ETF, the Bitcoin ETF, sometimes people have felt, hey, this price is really not matching up fast enough because there's so much of a difference between the New York Stock Exchange infrastructure compared to the very quickly moving trade all day crypto infrastructure. So there is technically no Bitcoin mutual fund at this point, and it's going to be very difficult, I believe, regulation-wise, to get that up and going at the moment. There is a couple Bitcoin ETFs, I believe. Then most people are buying crypto in other spaces, like we talked about in the webinar.
There's a couple other nuances in the mutual fund and ETF space. Two of the other primary differences are the fees. Mutual funds tend to be more expensive than ETFs as far as their fee structure goes, and that's more of a general statement. But even in the crypto space, an ETF would be likely less expensive than a mutual fund. And then how they calculate the value is different. So ETFs trade like stocks in real time, where mutual funds collect they calculate their NAV daily after the market closes. So there's a difference in how it actually trades, and then how the shares in an ETF are created versus a mutual fund are a little different. But that's a whole nother conversation and rabbit hole to go down. Um, Essentially, the reason you would invest in a mutual fund over an ETF is if you have belief that a manager has a style or an edge that differentiates them from just owning an index or more like passive. It's really the argument comes down to your belief in active over passive management. You're going to be paying somebody to actively manage your money, and you're paying them more than if you just chose to be passive in an ETF. Like, but like I
Yeah,
said, there's probably a couple other nuances, and that's a whole webinar in itself that we could probably the differences between an ETF and a mutual fund. But I hope that
yeah.
does help somewhat.
One last comment. It's a bit different than the average ETF or mutual fund, but there are some crypto funds that try and purchase all crypto, almost all crypto, like a ETF does. And there's some that are more like Mike's talking about, actively managed, where they believe in certain altcoins and they really don't believe in others. They're much more actively taking those in and out. Whereas some will just say, "Hey, we're giving you exposure to the top 50 coins or the top 1,000 coins." Right there. Couple questions about the recording. We will definitely publish this. We also have a really exciting, we're going to call it like a Rocket Dollar lesson. It's just going to go through day by day. You'll get some nice bit of recordings from all the videos we've been doing with Regiment. So on the crypto space and other stuff. Yes. So you will see this probably in the next week with our team. We'll get that up. A few kind of Rocket Dollar questions. One is about okay. There's one, is it okay to pay monthly self-directed IRA fees out of a personal credit card? So this is one of the only areas the IRS is fully okay with you using personal money or retirement money. They have clearly ruled on this. So if you have a financial advisor and they've got some fees, you can actually pay that, outside of your retirement account. So Rocket Dollar customers can pay that with a credit card. Some customers will actually use our debit card, go back in a circle and put it in our platform because they want to pay it out of their retirement account. However, a lot of people with a Roth IRA, they just like to not lose those dollars. Those are really valuable dollars. So they just pay with a personal credit card. That's what the great majority of Rocket Dollar customers do, and the IRS has ruled you're perfectly fine to do that.
We got a lot of questions here. I've been typing some of the answers, um,
Okay.
and I'm looking. A lot of these are specific to the kind of the self-directed IRA stuff. Is there a specific
Yeah.
amount that needs to be kept in cash in the bank account to keep it active or avoid fees? I think that's a Rocket Dollar specific question there, Brendan, from
Yeah,
Craig.
so we have a partner bank, Solera. We have two partner banks that we work with, and typically there could be a fee for that, but with Rocket Dollar customers, we have gotten rid of that fee. So our customers, as long as they're paying their $15 a month or $30 a month, they can move all of their fiat dollars out. So there's maybe zero balance or $1 left. They will not be paying fees of any kind, or if you do actually get charged with that, hey, our support team will get on the phone for you. They will be in your corner. We're going to make sure you're under our agreement and you don't get charged with any of those fees.
Cool. From Victor, are your previous webinars available online? Yes, they are on the Rocket Dollar site. And we have recordings that we can send out as well, Victor. And then I copy and pasted the Coinbase answer in the chat box here, your question about the Coinbase insuring against theft. So there's some insight directly from the Coinbase site that I pasted into the chat room here.
Mhm.
Can you buy a crypto from Alexis? Can you buy a crypto ETF from a non-USA country? Are there restrictions on owning assets abroad?
Um, yeah, so in the self-directed IRA, especially with an IRA LLC, you can actually own anything abroad as long as you're not breaking any U.S. law. You are good to go, and that's a really fantastic part of the IRA LLC. If the IRS says you're good to do it, you can do it. If you're using what's called direct custody, where you have to get the alternatives custodian to approve things, they might. I see someone asking about Australia. They're probably, I could see them easily approving something in Australia. But when it comes to other countries, if it's getting out of Australia, Canada, England, they'll lock that down. They won't allow it. So what's nice is that the IRA LLC allows you to go pretty much anywhere internationally. Uh, Very flexible. Okay, just getting a few questions about Binance. Many of our customers use Binance. We have to have somebody. They do not have to be a U.S. citizen at Rocket Dollar, but you need to at least have a U.S. address and phone number for a two-factor authentication. We work with customers on that. Sometimes it causes a few issues, but you can basically use an exchange. As long as they're going to take your LLC, you're good to go. As long as you can get a bank account open in the U.S., which some international customers, pretty easy. Some, depending on their living situation, it's a little harder. You just have to be able to pass a know your customer check at a bank in the U.S., which can be a little arduous sometimes.
All right, I'm trying to keep the questions up to speed here. Is it okay to open an account with Binance International and trade there under a Roth?
Yeah, so we just answered that one.
Okay, I'm sorry.
Yeah, and then Caitlin was asking, hey, can I fund it with some of my existing crypto or be funded by fiat? So yeah, we covered that in the beginning of the webinar. It unfortunately has to be fiat. If you have your personal crypto here and you have your IRA's crypto, you really can't mix those. And one thing is you really can't fund anything or sell to yourself. So the IRS sees as selling your personal crypto. They see it as selling that to your IRA, and that could be a self-dealing transaction. You can buy crypto with fiat from your brother. You can buy it from your cousin. There's a lot of different people you can buy it from, but you just have to be very careful when it's yourself. Okay.
Thanks for all the great questions, and thanks for the time. We'll follow up with everybody with our contact information. I've already had some requests for our due diligence questionnaire, and we'll be presenting our Edge Mode, the edge computing Bitcoin mining company that Regiment is a Regiment deal. That's next Thursday. So I'll follow up with the link for that as well. And feel free to, reach out to us afterwards if your question didn't get answered. And just can't
Yeah.
be grateful enough, for everybody taking an hour of their time to, to listen to us on the two very timely topics of digital assets and, self-directed investing through Rocket Dollar. So I got to hop. I got a hard stop. And
Okay.
Brendan, thank you again. Everybody at Rocket Dollar, the Rangers say
All right.
hello and
We'll see you, Mike.
happy. Yep. Thank you.
We'll stop the recording here, but I'll keep answering questions for a few more minutes, everyone. Okay.
Awesome. Appreciate it.
All right. Katie, if you could
Bye.
pause the recording right here, that'd be awesome.